Section 13. Building the short sale package. David opens his financial life to the lender. David arrives at Ashley's office carrying a folder that looks like it has survived a windstorm. Inside are bank statements, mortgage notices, tax documents, business records, handwritten notes, and several envelopes he still has not opened. He drops everything on Ashley's desk and says, "Here's everything they could possibly need." Ashley looks at the pile and smiles. "Maybe, but we're going to organize it before we send anything." This is where the short sale process becomes very real for sellers. Up to this point, David has talked about his hardship. Now he may be asked to document it. The lender or servicer isn't simply deciding whether David deserves help. It is evaluating a financial proposal involving a debted services or an investor whose requirements it must follow. That evaluation can require a substantial amount of information. There is no universal short sale package. One of the first mistakes agents make is assuming every lender wants the same documents. Requirements can vary depending on the lender, servicer, investor, loan, and program. One file may require documents another does not, and requests can change during the process. David's servicer asks for written authorization, allowing appropriate communication about the account, information explaining his hardship, financial documentation, the executed purchase contract and applicable addenda, listing information, estimated closing figures, and additional lender-specific forms. Ashley explains that the safest approach is simple. Follow the actual instructions for this file. Don't submit the checklist you used on a short sale 2 years ago and assume you're finished. The hardship letter needs to be true. David begins drafting his hardship explanation and asks Ashley, "What should I say to make them approve it?" That's a dangerous question if the agent handles it incorrectly. The hardship explanation is David's story, not Ashley's opportunity to create a more dramatic one. If David's business income declined, he can explain that truthfully. If he missed payments because of specific financial circumstances, he can accurately describe those circumstances. What Ashley should not do is invent a job loss, exaggerate expenses, or suggest that David include information that isn't true because it might make the lender more sympathetic. Here's where many agents get into trouble. They become so focused on getting the deal approved that they start treating accuracy as negotiable. It isn't. AAC R4-28-1101 requires Arizona licensees to deal with clients and transaction issues consistent with their professional duties, and ARS Section 32-2153 provides grounds for discipline involving various forms of improper conduct. A short sale does not give anyone permission to misrepresent facts. Then someone comes to look at the house. A few days later, David calls Ashley. "Somebody just walked around my property, taking pictures. Who was that?" Ashley checks the file. The servicer has ordered a valuation. Creditors evaluating short sales often want independent information about the property's value. Depending on the circumstances, that may involve a broker price opinion, or BPO, an appraisal, an automated valuation, or another valuation method. Why does this matter? Suppose Marcus and Elena are paying $518,000, but the lender's valuation suggests the property could reasonably sell for substantially more. The creditor may decide that accepting the proposed payoff does not make financial sense. It might reject the proposal, counter at a higher amount, or request additional information. On the other hand, if the valuation supports the contract price, the offer may appear more reasonable. The important lesson is that the lender is making its own financial decision. Ashley's opinion of value does not control that decision. Ashley now has something else to worry about: David's financial records. His short sale package may contain bank statements, account information, income records, tax information, loan numbers, and other sensitive material. That is not paperwork an agent should casually leave sitting on a printer or forward through unnecessary email chains. Brokerage policies, applicable privacy obligations, and sound risk management practices should guide how sensitive documents are stored and transmitted. Agents should use approved systems and limit access to people who legitimately need the information. Imagine explaining to David that his short sale was difficult enough, and then telling him his bank statements were accidentally sent to the wrong person. Protecting information is part of protecting the client. The missing page that cost 2 weeks. Ashley carefully submits the package and documents the date. Several days later, she follows up and learns that the servicer considers the file incomplete because one page of a bank statement is missing. David is frustrated. That page was blank. Maybe it was. The lender still requested the complete statement. This is a classic short sale problem. A missing signature, outdated statement, incomplete form, or absent page can delay review. By the time the missing item is supplied, Another document may have become outdated and need to be refreshed. Experienced short sale agents become obsessive about organization for a reason. They maintain checklists, record submission dates, confirm receipt when possible, respond quickly to requests, and document follow-up. The goal is not to annoy the lender. The goal is to keep the file moving. Then the lender responds. Several weeks later, Ashley finally receives an update. The lender has reviewed the package and valuation, but it isn't approving Marcus and Elena's transaction exactly as submitted. The lender wants changes. David immediately asks Ashley, "Can you negotiate with them and make them take our deal?" Ashley can assist with the real estate transaction and facilitate the process within the scope of her role, but she needs to be careful. Short sale negotiations can involve debt, deficiency exposure, settlement terms, tax consequences, and legal rights that extend beyond ordinary real estate brokerage. Knowing where the agent's role ends is just as important as knowing how to submit the package. That's where we're going in Section 12, negotiating the short sale without exceeding your license. Online discussion 1. David asks Ashley to make his hardship letter sound more dramatic so the lender will approve the short sale. What should Ashley do? Answer. Ashley should not invent, exaggerate, or misrepresent David's circumstances. She may help him understand what documentation has been requested, but the hardship information should accurately reflect David's actual situation. A desire to obtain lender approval never justifies providing false or misleading information. 2. Why might a lender order a BPO or appraisal during the short sale process? Answer. The creditor may want an independent estimate of the property's value to evaluate whether the proposed transaction makes financial sense. If the valuation indicates the property may generate a better recovery at a different price, the lender may reject or counter the proposed short sale terms. 3. Why should agents treat short sale financial documents differently from ordinary marketing materials? Answer. Short sale packages may contain sensitive non-public financial information, including bank statements, loan information, income records, and tax-related documents. Agents should follow brokerage-approved security procedures, limit unnecessary access, and use appropriate methods for storing and transmitting the information.